Hello, this is Mike Swanson of WallStreetRunner.com. I'm speaking with Jordan Roy Byrne, who runs the website TheDailyGold.com. How you doing today, Jordan?
Hey, Mike. I'm very well. Thanks so much for having me.
Yeah, it's been a while since we spoke. It may have been actually several months, and whatever the case is, it definitely in the world of gold, it seems like it's been an eon ago, because since January, we've seen gold put on a tremendous rally. I'm looking at the GDX gold stock ETF. It was below 13 in January, and it went all the way up to 21. Since February, it's been trading between a range of, say, 19 and 21. And in the past couple of years, we've seen gold and the mining stocks have big surges higher, but then crash. And right now, many people are predicting that to happen again, but I don't know. You know, this rally's been so powerful. We haven't seen one like it for so long. I think those people are wrong, but I'm curious to see what you think.
Yeah, I think those people are wrong. I mean, it's been interesting because about 3 or 4 weeks ago, you had all these people were worried about the gold commitment of traders report showing that the commercials were heavily net short gold, which in other words just means that the speculators are heavily long. And typically, Mike, that's what you see. I mean, when a market goes up, speculators jump on, they push it up. But, you know, one quick note on that, I like to measure the COT, the net speculative position, in terms of open interest. Now, back from 2002 to 2012, when gold peaked, the net speculative position was often 50 or 60%. And last week at the high, I think it was 43%. So gold is a little overbought. I mean, it's consolidating here. But the net speculative position, they're looking at that, and they're still viewing it in the context of a bear market. Now, in the context of a bear market, that's a huge worry. But in the context of a bull market where previous peaks have been at 50 to 60%, if we're only at 40% or 35%, there's still a long way that gold can theoretically run before there's going to be some huge correction. And, Mike, this just happens so often. After you get a really bad bear market, the next bull market, the market has a really strong rally, and then people who miss that initial rally, they're always scared to buy in. They'll think, oh, I'll just wait for a correction, and the market keeps going up. And I did a video a couple days ago, which was posted on my website, and I was just talking about, you know, some of the huge rallies off the lows after major bear markets. I mean, not just in gold stocks, but even in the stock market, like after the tech crash, after that bottom in 2002, and then after the low in early 2009. I mean, after a really bad bear market, when that transitions to a bull market, that new bull market, that market can just have a really strong rally, and it can just keep going for like a year before there's any big setback. And that, again, that's what we're seeing here. And even myself, about a month ago or 3 weeks ago, I was saying, well, GDX, if we're comparing it to the 2008 rebound, it looks like it could have about a 20% correction right now. And instead what's happened is the miners have basically just consolidated. They've been range-bound since the beginning of March, and the action has just been really bullish, Mike. Every time they've come down, like if you look at GDX, every time it's come down to test 19, I'm looking here, it's tested it like 3 or 4 times. Every time it's tested it in the last month, it's had a really nice rally, and so there's well-defined support at 19, and the miners are they're still a little bit overbought, and the way I measure that is the 50-day moving average, because looking at these huge rebounds off of a major bear market low, I said they keep going without a correction. Well, the 50-day moving average is kind of the first support there, and the 50-day moving average is still a little bit too far below where the miners are right now. So I'm getting too technical, but what that means is that the miners, even though they're really close to breaking out here, they might not break out. They might, drop again for another week, consolidate for another week or two before breaking out. But I mean, it's like you were saying, Mike, all these people, they're getting too cautious, and they're thinking of reasons to be bearish. I mean, I've even seen people talking about a head and shoulders in gold and the miners, and like, I'm sorry, but that's just total nonsense. And we're seeing it just in the last week. I mean, we had a strong rebound off of support, and looking at my screen today, I mean, the Huey, for example, at almost at 187. If it closes here, it's going to be the highest close it's had recently. And the same thing with GDXJ, which is leading GDX right now. GDXJ is trading above 29. That would be at its highest close. So, Mike, it's really tough to buy a market after you've seen it have a huge rebound already. But we're in that position right now. We're looking at the miners. They've had this basically bullish consolidation for over a month. I mean, we're in the 5th or 6th week now, and every time they've tested initial support, they've had a good rally. And the other thing, Mike, is, gold looks a little bit worse. Gold and silver don't look as good as the miners, but that's what you want to see when you're in a bull market in precious metals and you have a consolidation or a correction. You want to see the miners showing strength. You want to see the miners holding up. So the miners, they've maintained a lot of relative strength against the metals, and that's a sign that the next move for this sector is not lower, but it's going to be higher.
Yeah, one thing about that last point that you made is that in gold bull markets, the mining stocks tend to outperform gold. And in bear markets or topping markets, the opposite happens. So one thing that's interesting is I use a GDX divided by gold ratio to measure whether the stocks are outperforming gold or not. When that ratio is going up, they're leading, they're outperforming. And that ratio shot up from the low of January at the fastest rate it's done since way back in 2009. And then you got to go all the way back to basically 2000, the start of bull markets, in other words. And so I think that signals backs up everything you're saying. And I'm looking at the GDXJ chart. The high last year in January was about $30, and right now it's right underneath $30. So it looks to me, like we're in some sort of consolidation, and a lot of people are doubting. A lot of people don't want to buy. They're hoping for a pullback, as you said. And frankly, we've had this big bear market, and yes, the people in it got burned, and we saw these fake rallies, and that's causing people to be scared, I think. But I think if we break the 30 on GDXJ or have the run to 31 or 32, I think people will scramble to be buying, and the people that are scared or worried that this could be a fake, when they see that, they won't be worried anymore, and instead they'll be worrying about missing out. So I think that's what's going to fuel another run, is just people on the sidelines who've been in gold before and got hurt up, forgetting about that and becoming more fearful of missing out. And then other people who've never bought gold before, mining stocks, they're going to get in, because one thing that's happened this year is the stock market's not doing anything. The stock market hasn't done anything since, well over a year. People aren't making money in it, and they see gold now breaking away from the stock market. The gold stocks are the best performing sector this year. So there's going to be some new money coming into this. The type of person that loves to watch fast money and the FANG stocks and Apple, they're going to give up on that, and they're going to get it. Some of them are going to get into gold, and GDX is one of the most actively traded, exchange traded funds every single day. It shows that. So I think some people, they're going to get into gold by buying GDX, but then those people will learn more about it, and they'll start to buy individual mining stocks too. Because I think that's a whole other world, is the small speculative stocks that we haven't really spoken about them much. I don't really want to give any names out, but you showed me a stock that you recommended to your people that is up tremendously in just the past couple of days. So there's all kinds of things going on, and it's an exciting time now. I don't know when it's going to break. I don't know when the GDXJ though is going to break 30 and GDX are going to break out. I don't know if it'll surge before the close today or someday in a couple weeks, or just gap up above them and just go crazy. What are your thoughts?
Well, Mike, first let me say you made a number of excellent points there. I mean, my thoughts are the GDX and GDXJ, they're a little bit too strong right now. They're kind of above the 50-day moving average, but I would like to see another week of consolidation. But my gut probably says they did gap up today, so I wouldn't be surprised if we fill that gap maybe early next week before the miners break out. So I think if the miners, if they're not going to break out here, then they'll break out after they fill today's gap. But you never know. It could be another breakaway gap. And that's why, the last interview we did, Mike, I was saying just buy and hold. Just hold what you have. Don't try and trade in and trade out. Because of all the points we've made. Because, this is a bull market. It's going to move higher. And, I just want to touch on a couple things you mentioned, Mike. And we have to remember the bear market that we had. This was the worst bear market in gold stocks in 90 years. As far as price, it was the worst in 90 years. And as far as time, this bear market was 1 week shorter than the one from 96 to 2000, which was over 4 years. So, Mike, this is an absolutely devastating bear market. And just look at a 5-year chart of GDX and GDXJ. Do the miners look overbought in the context of a 5-year chart? No way. They look like they have a lot more upside. Whereas if you're looking at a 1 month or a 3 month chart, they look really overbought. But so again, it's a matter of perspective. You have to look at different time frames. But the other point you made I want to touch on is about the outperformance of the miners to the metal. The greatest outperformance always comes very early in the bull market. It always happens like in the first couple months or the first 6 months to a year. So we're in the time frame right now where the miners are going to continue to outperform the metals, just generally speaking, this year as it goes on. And I made this point in my book because I have data going back almost 100 years. But when gold stocks made that low I want to say last summer. They did have a false low in January, but the low last summer, Mike, if you're looking at gold stocks divided by gold, that was basically the lowest. I have data going back to 1938. That was the lowest level for that ratio since at least 1938. So, there's people who'd show like a 5-year chart or a 10-year chart and say, well, look how cheap gold stocks are. Well, in my book, which you can get at thedailygold.com/book, I have data going back to the 1930s, and so the relationship of the gold stocks against gold, this was like at an 80-plus year low. This wasn't just at a 5 or 10-year low. So there's some major mean reversion going on in that relationship. And, Mike, you were saying it's tough when you see these stocks go up. It's tough to buy in. You're waiting for a correction. I've even made that mistake. Yes, I was heavily invested in the last couple of months, but there are a couple stocks that I even mentioned in December and January where I was wrong because I thought they were going to keep going lower. I said this is a fantastic value, but I'm a little worried they're going to keep going lower. I'll just throw out a symbol. The symbol of one is pure gold, PGM.V, and that was one that it's pure gold mining. It's one that I've liked for a while, but they did a couple months ago. They did a non-dilutive financing. They were able to sell a project. So this stock was trading at cash basically a couple months ago, and I think I had some subscribers buy it because I mentioned it several months ago, saying it's trading for cash. And I can't, but that's the sentiment of the market. I was worried it was going to go down more.
Sure.
And so I passed on that. And even, I wrote about it because someone sent me an email after it went up to 22 cents. They said, what should I do? Should I take profits? And I posted it in my premium update because sometimes that's what I like to do. I like to answer subscriber questions and include it in the update. And I said, maybe this will correct 20 or 30%, but hold on to it. It's going to keep going higher over time. Now, it didn't correct. I was wrong about it correcting, but it kept moving higher. And so when you have a great entry point in these stocks, just hold on. Just hold on to it. Let the bull market bail you out. And, Mike, it's so tough. But what I've been trying to do with the cash I have in the last month or so is, you don't have to chase the strongest stocks. This pure gold mining, I wouldn't buy it right now, okay? It's gone way up this week. It's already up, 4 or 5 times in the last couple months. Make a list of the stocks you like best and look for the ones that maybe correct 10 or 15%. Because where we are right now, if I'm right, if you and I are right and the next move is going to be higher, these juniors, they're not going to correct 30% or 25% anytime soon. But if you see something that's you like it and it's off 10% or 15%, just buy that because odds are it's going to continue to move higher. And I'll give you a stock that I've done with that recently, and that's Endeavor Mining, EDV.TO is the symbol. And you're looking at Canada. When this got down close to $10, it was down 20. It was down, I think, 20% because they made an acquisition. And so I said, this is a great company. You know, I missed it early on. It's down 20%. You know, I have to buy it here because it's not going to go down 30 or 40%. And you know, fortunately, I got into that. And you know, if I would have bought it 3 or 4 months ago, yeah, I'd have a double. But you know, I bought this when it was down 20%, and look where it is now. I mean, it's probably already up 15 or 20% from where I bought it. So I'm not saying that that's the outcome for, you know, every stock you buy on weakness, but this is just an example. If you have a list of companies that you really like, just buy on weakness. Take advantage of 10 or 15% weakness if it's there. I mean, that's what you have to do, and that's what I've been doing in the last several weeks with my remaining cash, Mike, is trying to take advantage of this weakness. Any weakness that there is, I mean.
Well, this stock, Pure Gold Mining, was 10 cents in January. Today it's trading at 40 cents. And those are the type of gains that come in bull markets in mining stocks. And, you know, this can go on for years, you know. So it's something to know, you know, we've seen past cycles and know what can be in store for us. Well, as we wrap up, I like to tell people to check out your website, thedailygold.com, and to grab your book by going to thedailygold.com / it's book, right? / book.
Right. And you can also, if you just go to thedailygold.com, there's a big banner advertisement there where you can also get the book there.
Okay. That'd probably be the simplest for people then. Well, thanks for taking the time to talk with me, and we'll have to do another interview in the future.
Thanks so much for having me, Mike.
Thank you.